On Tuesday, June 10th, the Bank of Japan announced something unusual. Governor Kazuo Ueda had been admitted to hospital with an infected liver cyst. He was expected to stay for 2 weeks.
The next BOJ policy meeting is June 15th and 16th, and at that meeting Japan is expected to raise interest rates to 1%, a level the country has not seen since 1998.
The architect of Japan's financial normalization may miss the moment he spent 3 years engineering. To understand why this is significant, you need to go back to Nisen Shlukdain. That year, the Bank of Japan did something no major central bank had done before. It pushed its benchmark policy rate below zero to negative 0.8%. The thinking was straightforward: make money so cheap that no one could afford not to spend it.
It didn't quite work. Japan's economy remained sluggish, inflation hovered around zero, the yen weakened, and the global carry trade, a strategy where investors borrow cheap yen and invest the proceeds in higher-yielding assets elsewhere, grew to an estimated $100 billion to $2 trillion in notional size, depending on how you count it.
For 8 years, the Bank of Japan sat as the world's last negative rate holdout. Then Kazuo Ueda took over as governor in April-May sen, and everything started to change.
March Nisen RCC, Ueda ended the negative rate era. The BOJ raised its policy rate to roughly zero, its first hike in 30 years. Bloomberg called it the most significant shift in Japanese monetary policy in a generation.
July 24, the BOJ raised again, to 0.2%. Markets reacted immediately. The yen surged. Carry traders who had borrowed cheaply in yen and parked the money in US tech stocks suddenly had a problem. In a single trading session, the Nikkei fell more than 2%, its worst day since Senkyū no 10. The S&P Huku dropped 10%. Bitcoin fell 2%. An estimated $4 billion in carry trade positions unwound in a matter of weeks, according to the Bank for International Settlements.
All of that from 1/4 point hike. January near Lingden Lingden Chi percent. The highest level in 3 decades. At each step, Ueda managed the communications, the market expectations, the political sensitivities. He navigated a snap election, Middle East oil shocks,
And now, with the June meeting 5 days away and markets pricing an H to 96% probability of another H or W basis point hike, a Reuters poll of economists confirms the consensus: Ueda is watching from a hospital bed.
His deputy, Ryozo Himino, will preside instead. The other deputy governor, Shinichi Uchida, will handle the post-meeting press conference. Here is the question the markets are really asking: does this change anything?
The answer, based on everything we know, is almost certainly no. Himino is not a caretaker figure. He holds a law degree from Tokyo University and an MBA from Harvard Business School. Before joining the BOJ, he ran Japan's financial services agency, the country's bank regulator. He is considered more hawkish on monetary policy than the median BOJ board member. In parliamentary testimony last week, he said Japan's real interest rates remain at extremely low levels and that the BOJ will continue to raise the policy rate in line with economic and price developments.
The policy path here is institutional, not personal. Ueda spent 3 years building consensus on the board. Multiple board members have publicly signaled support for June tightening. Inflation has stayed above the BOJ's 9% target. Wage growth is real. Inflation-adjusted wages rose 0.2% in the most recent monthly reading, up from 0.2% the month before. The conditions Ueda identified as necessary for normalization have been met.
Each % policy rate would be the first time Japan has been there since 1995, that's 31 years. Think about what has happened in that interval. The dot-com crash, 9/11, the global financial crisis, Abenomics, negative interest rates, a global pandemic. Japan spent all of it essentially paying people to borrow.
The era is ending regardless of who is in the room. That said, the Ueda absence introduces a specific risk. Markets care about clarity. What investors need from the June meeting is not just the rate decision, it's the forward guidance. Will Himino signal how quickly the BOJ is moving toward its terminal rate, which it has penciled in at somewhere between 1 and 2%? Will Uchida's press conference convey the same steady confidence that Ueda had cultivated? A muddled communication, one that opens the door to uncertainty about the pace of future hikes, could trigger exactly the carry trade turbulence that the July Nissan Mun hike produced. That event is still fresh in institutional memory.
The stakes, in other words, are not just about Leindan Rwu percent. They are about whether Japan's central bank can execute a historic policy turn without stumbling on the optics of an absent governor.
There is something almost cinematic about this moment. Kazuo Ueda spent nearly 3 years dismantling the infrastructure of Japan's lost decade monetary policy. He absorbed the political blowback, managed the August Nutten arson Sith market shock, communicated through a snap election and a Middle East crisis, and methodically walked rates upwards step by step. And now, 5 days before the finish line, each percent for the first time since Senjufak Jush Wug, he is not going to be in the building.
But that might actually be the story. The BOJ's next hike proceeding without its governor says something important about what Ueda actually built. Policy normalization in Japan is no longer one man's project, it is institutional consensus. The board is aligned, the data supports the move, the communications machinery is in place.
Himino does not need to be Ueda, he needs to be clear. Economists polled by Reuters expect at least one more hike after June, likely in the October to December window, bringing the policy rate to 1% or higher by year end. For Japanese households, variable mortgage rates are adjusting upward. The changes are gradual but real. For corporations that had built their financing strategies around near-zero borrowing costs for decades, the math is shifting.
The question for the months ahead is whether Japan can continue normalizing rates without triggering another global market dislocation, the kind that a July Nissan Arsisint repeat could deliver, only at a higher base level.
Ueda built the path, Himino walks it. And the world's largest carry trade is still watching. Word count. Censured words, estimated duration, middle U minutes format news flash.